In this video, I will explain my strategy that will help you to actually make your first 10k month in 2026. It will be the only video that you ever need to actually start day trading. It is super easy. And I will also show you the 2 trades that I took to actually make me $1,800 today on the second day of the new year. Without further ado, let's get fucking into it. This strategy is literally so easy. There are only 4 criteria that need to happen before actually entering a position. The first one is a previous hour SMT. I will cover all of this in the next upcoming minutes, so please focus. Next we need is a V-shape. After that I need a 1, 2 or a 3 minute inverse fair value gap. And after that I want to see a 1, 2 or 3 minute CISE on the charts. If all of this happens, I enter. If none of this happens, even if there is no inversion, no CISE or no V-shape, but all the rest is there, if one of them isn't there, I will not enter. It's that easy. We have either all 4 or we have nothing. The first criteria is we need to have a previous hour SMT. What do I mean with the previous hour SMT? We literally go to the 1 hour time frame and we need to see an SMT with the previous candle. For example, we have 2 examples. Of course, there is a bullish and there is a bearish SMT. This is a bullish SMT. Why? As you can see, this is Nasdaq, this is the S&P 500. On the 1 hour time frame, this is Nasdaq's previous hourly candle. We broke below it with the next candle. On S&P 500 we did not broke below it, so we have an SMT with these lows. We have a bullish SMT. After this we will be looking for buys. On the other side we have Nasdaq and the S&P 500. Again, this is a bearish SMT. Why? We close our 1 hour candle, we break it in the next candle, meaning we break the highs of the previous 1 hour candle. On S&P 500 we don't break the highs of the previous candle, so you have an SMT. When we have this type of SMT with the highs, we are actually going to look for shorts. This is the first step that needs to happen. If we don't have this, there is no trade, there is no setup. Alright guys, so I'll try to explain this to you as if you are little kids. It is super easy, so please focus. This is the 1 minute time frame. I will in here explain a bearish SMT. Why? Because we have 2 examples live today that I will show you later. So this is the 1 minute time frame indicating a bearish previous hourly SMT. Alright, this is a structure on the 1 hour. This is what it looks like on the 1 minute. Let's say, for example, this is the high of the previous 1 hour candle. We close the candle somewhere right here. We open a new candle. This is the start of the new 1 hourly candle. It breaks the previous high. All right. So we have an SMT right. Here. Let's mark it out with a black line. This is the high that we broke on Nasdaq. We did not break it on the S&P 500, right? So the S&P 500 stayed below this red line. Next, what I would like to see is a V-shape. I told you the 4 criteria that I need to have the first one. This is our previous hourly SMT. Next, I would like to see a V-shape. What is a V-shape? It is literally a V-shape in a market after we have our SMT. So right now we have our SMT. This is the first leg of our V. I want to see immediate rejection on this SMT and see price just come all the way back down, not in like 5 or 6 or 7 candles, just immediately when we have the SMT. I would like to see some rejection. Why? Because the chart then shows me that he actually wants to reject off this SMT and not just of a random space in the market. I cannot mark out this V-shape, so I'll just wait for market structure to form. What can I mark out on the chart? I can mark out a fair value gap. So that is our next thing that I want to see in the market. Where is my fair value gap? It is right here. Why? Because the 3 following candles do not touch each other. If you don't know what the fair value gap is, I highly advise you to watch other videos. I'm not going to go super in depth about this concept, but I think most of you guys really know it. So what do I want to see with this gap? I would like to see this being inversed. What do I mean with it being inversed? I need to see a candle close below it, so I know this gap is not being respected as a fair value gap and that it actually inverses, so we can go further down. That's the second criteria. Then that's the third criteria, sorry. Then the last criteria that I need to see is actually a CISE. What is a CISE? A CISE is a close below my last low. So if you look at market structure, this is my last low before we created a new high. This high created the SMT, so this will be my last low. I need to see a candle close below this level, right? Super simple. An inversion. After that, I would like to see a candle close below my last low. Market structure, bam, 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 bam. Where is my last low? It is right here. I want to see it on the body. I forgot to tell you that the low is for me on the body, not completely on the wick. So a close below the body is fine for me. When all of this happens, I will enter. So after all of this happened, I will actually enter my position right here. 4 criteria that are happening right now. We have our previous hourly S&P. Nasdaq broke it, S&P didn't. Just keep in mind S&P is right here, did not break the highs. We have our V-shape that I was talking about. As you can see, we created a V. We also inversed our fair value gap. We closed below it, meaning we do not respect it. And then we also had a close below my CIZ level. Right here is the close. So we respect the CIZ close below. This is the point where I will enter my position. So my stop loss placement and take profit placement is actually super easy. What will I do with my stop loss? I will literally place it above the high from the S&P. Above the high from the S&P. So this level will be my stop loss. If I, for example, entered here, I will put my stop loss at this level. If you go above it, I am out of the trade. Doesn't matter at all. My take profit, super easy, guys. I will always target a 1-to-1 risk reward. Super simple, guys. I am not that guy that is going to tell you that you need a 5, 6, 7 risk reward. I do not care. I need a 1-to-1 risk reward ratio. There is also a lot of psychology behind it. I never have issues with consistency rules. I never have big issues with my psychology because I literally target a 1-to-1 and I don't need to hold to see a 1-to-3, 1-to-4 and then see the numbers disappear because we get a pullback. I don't have to worry about it at all. Also, why do I target a 1-to-1? I notice that a lot of times when I actually target a 1-to-2 or a 1-to-3, price never gets there. However, we do get to a 1, 1.5 or maybe a 2 and then we always reverse. So for me, it is not worth it to actually target higher risk rewards than 1. That's the thing behind it. Also, 1 risk reward and I'm out. Simple as that. No runners, no closing 50%, 1 risk reward, fully out. That's it. Let me now show you guys the live examples of the 2 trades that I took today in the market. Okay guys, so first example, I marked out this 1 hour high happened at 10.12 on Nasdaq, same high on 10.10 on S&P 500. Doesn't really matter, it is the same high on a 1 hour time frame. What happens? We break it with the 11 hourly candle. Same here on Nasdaq, we do not break it, okay? So we have our S&P right here with the 11 hour candle that breaks the high on the 10 a.m. hourly candle. It happens on S&P, didn't break the high on Nasdaq, doesn't matter, we have an S&P with our previous hourly candle. What happens next? I want to see a V-shape. What do we see in the market? Bam, we have our S&P, bam, we go down, V-shape. Super simple. Next, I marked out my CIZ level. Next, I mark out my fair value gap. On the 2 minutes right here, we have a super clean fair value gap. I want to see that being inversed. And then on the 1 minute time frame, I went to see for a 1 minute CIZ. This was our last low before we created a new high. So it's super important that you listen exactly to what I say. Our last low before we created a new high. We did not create a new high right here. So this low does not count. So I wanted to see a close below this red line. What happened? We have an inversion, even have an inversion on the 1 minute time frame, 2 minute time frame, and I don't know the 3 to 3 matter. We closed below the red line, and that's exactly where I entered. You cannot see the executions because I entered this position on another account. I will show you the profits later. But the next trade I did enter, as you can see, there are my executions. What happened with this trade? No drawdown, just trade the profit, 1-to-1 risk reward ratio, and then we completely reversed. We would have hit stop loss if we would have targeted more. So again, 1-to-1 is key. Stop loss right here on the high that created our S&P. Super simple. Take profit at a 1-to-1. Next, exact same trade idea. But this time Nasdaq broke it and S&P did not break it. So what do we see? We have our high on 11.11. We have our high on 11.16. So it's the same high on the 1 hour time frame. Next, what we need to see is we need to see a break in the next hourly candle. We break it on Nasdaq. As you can see, we break this high, super strong break it. On S&P, we do not break this high at all. I then actually went over to the 3 minute time frame because for me the 3 minute was way cleaner than the 1 or 2. 3 minute highest time frame with the best inversion. As you can see, we had a fair value gap right here. I wanted to see that being inversed. We also had a V shape, slow but steady. We had the V, so that for me was also nice. Second thing, third thing we need to see, fourth thing we need to see is a CIZ. We need a close below this CIZ level. This is my last low before we created a new high. Super simple. The close is the red line is on the body. Why? Because I do not count the wicks like I said. We have a close below here. I then entered literally again 1-to-1 risk reward ratio, and it got tapped within 10 minutes. Yes, we dropped after. This was high impact news. I don't want to be in a trade when that happens, so this could have ended out way worse than hitting TP. Again, guys, stop loss above or on this high, stop loss on this high, take profit at a simple 1-to-1 risk reward ratio. I will now show you guys the profits. So this is from the first trade, and then this is from the second trade. So overall, a very good day. This was on eval, so it doesn't really count. This one is on funded, so I think that's like 6 times 300. That's 1.8k today on all the funded accounts. I am super happy. This is a strategy that I use every single day at the same time, and it works for me. It has a 90+% win rate. Just learn it, just copy it, and if you have any questions, make sure to ask. Also, guys, I will be posting way more on Telegram, so the link is down below. You can just join for free. I'm not going to charge you anything. If you want to learn more about this strategy or in-depth psychology, make sure to click the link down below and apply for a free call. Anyways, thank you guys for watching, and see you in the next video.